Hello investors and future investors, welcome to the channel. For today's video, I'm going to be doing live trades. That's right, I'll be doing two live trades right in front of you. I'm going to show you how it's going to be executed. Most importantly, I'm going to give you a detailed walkthrough of how to do these trades, and I will show you how these option strategies can be used, particularly if you're trading with a small account. Now, if you're new to options trading or you're trying to use options in order to make some additional income to supplement your 9 to 5, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, we're going to be doing two live trades. The reason I'm going to be doing two live trades is because the last trade I did last week was never filled. I'm going to start off the video by going ahead and show you that. In addition to that, I'm going to go ahead and close out the strategy that we did the week before that right in front of you. So today's video is going to be a bit longer, but it's going to be action packed, I promise you. Now, you guys know how we do it. We like to go ahead and get down and dirty right off the bat. That being said, the strategy for last week was what's known as a call credit spread, and I attempted to do a call credit spread on none other than CRWV, and that ticker is CRWV. I'm going to go ahead and scroll down to show you the result of it. Now, if you guys remember, or if you guys have not seen the video, I was supposed to get around $40 and I was risking $100, which would have given me a return of around 40%, which is huge. Now, as you can see here, on 3 different occasions, I changed prices in order for them to get filled, and I still was not able to get filled. Now, the price that I did choose was 110, 111, and if that did get right here, you could see it 110. If it did get filled, I'd probably be up around 25% on the trade today, which is just 1 week after it would have been filled. But we don't cry over spilled milk. We go ahead and we continue trying to generate consistent income to grow our portfolios. Now, we're going to go ahead and go back to the strategy that we did 2 weeks ago, and I'm going to go ahead and close that out right in front of you. Okay, investors and future investors, here we are on the trade I did a couple of weeks ago. If you guys are new to the channel or you guys have not seen these videos, the name of the thumbnail is going to be Trades That Pay, which I show you exactly what I'm doing and how you get paid right away. So we had this put on a couple of weeks ago. So what I'm going to do now, I'm going to go ahead and close it. And most importantly, you're going to learn an exit strategy. The current price now of TTD, this is Trade Desk, is 88.94. My puts was 75.74. So the current price is trading higher than the strike price I chose. That means I'm most likely up on the trade. But let's go and verify that. So as you can see here, expiration date 8/15, so I still have about a week and a half in order for this to expire. As soon as I did this trade, I received income. The income I received was 0.33 or $33. Each option contract contains 100 shares, so you multiply the 0.33 cents that you receive, and that's going to give you $33. Now, currently, today's return on this option is going to be $5, which is going to be about 23.8%. Now, the total return since this was open 2 weeks ago is going to be representative of a monetary value of $17, or if you like percentage, I'm 50% up on the trade. Now, I want you to remember the 50%. That's going to be handy when I go ahead and show you the option strategies for today. And most importantly, the day this was open was 7/22. So now everything is verified. Let's go ahead and close out this bad boy. Now, if you are trading with Robinhood, Robinhood makes this extremely simple. As soon as you go ahead and you open up your current option strategy, Robinhood right here gives you the option to close it. So what I'm going to do, since I'm up around 51, 54%, I'm going to go in here and put in the price that I want to pay in order to close this. Robinhood is suggesting that I pay back $16 of the $33 I received in order to close this option strategy. However, I'm the one in charge, not Robinhood. So I'm willing to pay 14 cents. So let's go ahead and put 0.14 right here. Now, down here where it says time in force, because I don't have time to monitor my phone and keep my eye on this trade, I'm going to change the parameters right here. I'm going to go to good till cancel. What that's going to do, whenever I'm up on the trade and I only have to pay back $14 in order to close the trade, this is going to be executed automatically, whether I'm in the app or not, when I'm close to my computer or not. So we're going to go ahead, we're going to hit review. And then the last step, the most important step, we're going to hit submit. Now, before we hit submit, this is the most important part, right? Before you did this option strategy, you needed to leave a collateral. The collateral was $100, which make these option strategies extremely important and lucrative for anyone trading with a small account portfolio. So once I go ahead and submit and this gets filled, then this $100 is going to be mine again in order for me to go ahead and use that $100 repetitively. So we're going to go ahead, we're going to hit submit, and that should be filled whenever it does get filled. Now, moving on for today's strategy. Today's strategy, we're going to use another speculative stock, and that's going to be OSCR Health, and that ticker is OSCR. Now, you guys are trading with a small account portfolio. You will need to take some risk. Does not mean you need to take a lot of risk in order to blow up your portfolio. Hence, I'm showing you these option strategies where you only have to use about $100 in your portfolio. If you do have a $1,000 portfolio, $100 is going to be like 10%. If you lose 10% of your portfolio, you still have 90% left. If you were to do this trade, you would have to lose 10 times in order for you to blow up your portfolio. Hence, I show you what to do if you're trading with a small account portfolio. Now, here's the trade for today, and I did promise you I'm going to give you guys two trades. This is trade number one. So this is OSCR Health, and that ticker is OSCR. Let's go ahead to trade OSCR options down to the bottom in order to open up the options chain. Now, for those of you new to options, in every single brokerage that you use, you will get this information. All this information together makes up what's known as the option chain. And what the option chain does is that it gives us enough information in order for us to make an informed decision. So, speaking of decisions, I have two requirements for my subscribers and also my viewers. Requirement number one, always make sure to do your own due diligence before investing. What might work for my portfolio, quite frankly, may not work for yours. Requirement number two, always make sure you have an exit strategy before entering any trade. That way, if the trade do decide to go against you, then you know how to get out of the trade. Now, I just showed you one exit strategy, which was to close the option at a certain percentage, whatever amount of money you want to pay to go back. And I did show you I closed at a 50% and above gain. So for this now, we're going to go ahead to sell. We're going to go ahead to call. And now we're going to go ahead and change the strike date. The strike date I'm going to be using for today, which is going to be August 29th. And that gives us around 23 days to expiration. Remember, these videos are simply for educational and entertainment purposes only. Go ahead and do your own research. OSCR is a very speculative stock. The reason I'm using it is that the premiums are so juicy. That being said, let's go ahead and choose our first strike price. Now, the first strike price I'm going to be going with is going to be the $16 price. The reason I'm going with the $16 price is that it gives me around an 80% chance of this trade going in my favor. Now, if you do have a high chance of profit of 80%, that also means you have a low chance of this trading against you. And in this case, it's going to be you're going to have a 20% chance that this trade goes against you. Those are odds I can live with. So we're going to go ahead, we're going to select that. We're going to go back to the top now. We're going to go to buy. We're going to go to call while maintaining the exact same strike date. And now I'm going to go ahead and add the second leg of this option strategy. Now for the second leg, just to make it simple, I'll be choosing the strike price right above our previous strike price. So I'll be going with the 16.5, as you can see right here. Let's go ahead. We're going to select that. Now, the difference between the 16.5 and 16 is going to be known as the spread. I'm going to explain this a lot more when I go to the second option strategy for today. We're going to go ahead, we're going to hit continue. Now, this option strategy, once again, is known as the call credit spread. Remember, we did try to do a call credit spread last week's video, but that did not go through. So I'm going to go ahead and do it again today. Now, most importantly, as soon as you do the call credit spread, because it's what's known as an income generating option strategy, you're going to get paid. That's why we're here. We're here to make consistent income. Now, the amount you're going to get paid is going to be $12.92. Let's round it up to $13. That $13 is going to be yours to keep no matter how this trade goes. Now, we're going to go ahead and hit review. in order for you to do this option strategy, there's one key criteria that needs to be met. That criteria is that you need to leave a collateral. The collateral in this case is gonna be $50. Now, the return on investment, you're gonna be risking $50 in order for you to make $13. The ROI on this is gonna be around, I think, 26%. So how do you get 26%? You're simply going to divide $13 by the amount of money you're going to leave for collateral, which is $50, and that's going to give you 26%. 26% in the option world or in any world is a very lucrative return. I mean, 26% in just 1 month, that's a very, very good return. Now, I mentioned this a couple of times. I'm going to say it again. OSCR Health is a very speculative stock. You always make sure to choose your strike prices based on your own risk tolerance. So if you think this is a bit too risky, what you can do is go ahead and choose your strike prices a bit higher. What that's going to do is that your premium is going to reduce. However, you're going to increase the chance of the trade going in your favor. So do as you will with your portfolio. Remember, it's your portfolio. No one can tell you what to do with it. Now, I am going to execute this trade live, but what I'm going to do is that I'm going to go ahead and I'm going to select multiple contracts for today. So let's say, you know what, I'm going to explain that in the next video. Let's just make this one simple. So let's go ahead. We're going to hit 2 right here. We're going to go to review order. So now, instead of leaving $50 collateral, I'm going to have to leave $200 because now I'm doing 2 contracts. Now my premium is also going to go up. I was receiving actually around $13, but now I'm going to be receiving $26, which is double. So double the premium, double the collateral. I can live with that. Let's go ahead. We're going to submit. Let's go to submit, and hopefully that gets filled. Let's hit done, and voila. Now let's go into the last option strategy for today, and this one is pretty exciting. I promise you. If you guys are still here, now would be the perfect opportunity, if you haven't already, to go ahead, like the video, subscribe to the channel for more videos like this where I show you live trading and how this can help grow your account portfolio. Now, for the last option strategy for today and the last trade for today, we're going to use the big boy, which is going to be the Spider ETF, and that ticker is going to be SPY. So let's go ahead and we're going to wait for that to load. And once again, we're going to go to Trade SPY options down to the bottom here in order for us to go ahead and open up our options chain. Now, this option strategy is going to be super exciting. So I want you to pay attention because I will not be doing too much explanation. I'm going to be doing it live. So to start off, I'm going to go to sell. I'm going to go to put. I'm going to choose my expiration date and I'll be going with August. Let's go a bit out some more. I'll be going with, let's go with August 29th right here. And that gives me a 23 days. You know what? Let's do August 22nd. So 16 days to expiration, which is roughly around 2 weeks. I can live with that. So sell, put, August 22nd, 16 days before this contract expires. Now we're going to go ahead, we're going to choose our first strike price. Now, what you're looking to do, especially if you're a beginner, how do you choose your strike price? I know that's always a question. So you choose your strike price. Well, not you, but I choose my strike price based on chance of profit. So in this case, I'm going to go ahead and choose my strike price based on a 75% chance of profit because I'm doing a put. The reason I'm going with a 75% chance of profit is because the market goes up way more than it goes down. And you're going to see that more when I do the rest of this option strategy. So at the 75% chance of profit, that's going to give me the strike price of 623. We're going to go ahead, we're going to click that. Now we're going to go ahead to buy while maintaining the exact same put and while maintaining the exact same strike date. Now we're going to go ahead and choose another strike price. To keep things simple, I'm just going to choose the strike price right below our previous strike price, and that's going to give me the 621. Now, the difference between your 622 here and your 621 here is what's known as the option spread. The option spread in this case is going to be $1. You get that by you subtract 621 from 622 is going to give you $1. What your option spread does is that it helps determine the amount of collateral you're going to have to leave. So to determine how much collateral I'm going to have to leave before executing this trade, actually no, we should be going the 622 price because we chose the 623. So it's still going to be $1. So this is how you're going to determine your options collateral. Your spread is $1. You're going to multiply your $1 by 100 shares because each option contract contains 100 shares. That's going to give you $100. So my collateral on this should be $100. Let's go ahead. We're going to select that one. And there you have it. This is the first half of this option strategy. And this first half is going to be the put credit spread. But we're not done yet. Now we're going to go ahead and shift the parameters just slightly in order to add some more legs to this option strategy. So let's go to sell. Let's go to call. If you guys are lost, just go ahead and search the channel for these option strategies. There are detailed explanation on each. I am doing a live trade, so I'm not going to explain everything in detail. I'm just going to actually show you the trade and how to execute it. So now we have sell, we have call. Very importantly, I have to maintain my exact same strike price. So I'm going to keep that here. Now I'm going to go ahead and choose my first strike price to the top half, or rather my third strike price for this entire option strategy. Now, what I'm looking for now, again, is the chance of profit. The chance of profit I will be looking for this one is going to be at 80% and above. Now, I'm pretty sure you remember for the bottom half, I started off with a 75%. And once again, that's because the market usually goes up way more than it goes down. The reason I'm choosing an 80% or higher is because the market is most likely going to go up. So I'm going to go as high as possible in order for me to not get assigned. So hence, I choose a higher chance of profit on the top side than on the bottom side. Now, let's see what strike price I'll be going with. And that strike price is going to be, where is it? Okay, let's go with the 650. Now, this trade is probably like a 98% chance that I'm going to win it. Although it says 88% here, there's like a 98% chance I'm going to win. The reason why there's a 98% chance that I'm going to win this trade is because 650 is going to be an all-time high for SPY. So SPY literally has 15 days to move from $32 to from 632 to 650, which it can be done, but the stock market is not linear. It doesn't go straight up. It goes up, it goes down. So if that happens, I will be happy because the SPY is going to make an all-time high, but it was not going to be good for this option strategy. So hence, I'm going to be going with a 650. Let's go ahead. We're going to select that. Now we're going to add the last leg to this option strategy. And for that, we're going to go to buy. We're going to maintain the call and maintain the exact same expiration date. Now I'm going to choose the strike price above my previous strike price. So I'm going to be going with the 651 because previously I went to the 650. Now the reason I'm choosing my spread so close is just to keep this video very simple. If you guys want me to do a detailed explanation about spreads and how you could increase your spreads to reduce your risk and all that kind of stuff, in the comments below, just simply type in spreads. I'll go ahead and make that video for you. So we're going to be going with a 651 strike price. Let's go ahead and select that. Okay, this new option strategy that we are going to do today is going to be the Iron Condor. The Iron Condor is a 4-leg option strategy, but most importantly, it's an income generating option strategy, meaning as soon as you do it, you're going to get paid. The money you're going to get paid is going to be yours to keep no matter how the trade goes. The second most important thing about the Iron Condor is that it's perfect if you're trading with a small account. And the reason for that is because the amount of collateral you need to leave is going to be very low. And let me show you. Let's go to continue. We're going to hit review order right here. Let's go review. And there you have it. In order for me to do this Iron Condor, I'm going to get paid right away. The amount of money I'll get paid right away is going to be $33.84, or let's round it up to $34. One of the most important things in order for you to do the Iron Condor is that you have to leave a collateral, which I just mentioned. Now, the collateral you need to leave is going to be $100. So I'm actually risking $100 of my portfolio to make $33 on an Iron Condor. An Iron Condor is what's known as a range-bound option strategy, meaning the share price needs to stay between a certain range and this trade is going to go in your favor. The Iron Condor has a very high probability of success, and those are not just my words. Those are words of option traders that has gone way before me. So now we're going to go ahead and, you know what? Let's go ahead. We're going to do... No, before I go ahead and increase my spreads, let me tell you why I'm increasing my spread. Let's say you want to make $34, and I do apologize, guys. This is live trading. This is not edited. This is live. So let's say you decide you want to make $34 on a regular basis. You could do it this way, but now you have to wait until there's some kind of non-movement or until time expires in order for you to make your $34. But I have a different way in order for me to almost guarantee that $34. In order for you to get this $34, you may have to win this trade almost 100%. But let me show you how I'm going to guarantee myself, or rather increase the odds of me making $34. So let's go ahead. We're going to go down. We're going to go to back. Now remember, these videos are stuff I'm doing with my own portfolio. So feel free to copy if you want, but remember, do your own due diligence before doing any of it. So what I'm going to do now, I'm going to go and hit 2 right here. Now with 2, my credit has increased. So my credit now is going to be 67. Let's go to $68. Now, if I want to make $34, all I need to do is wait for the trade to be up 50%. Remember, I showed you 50% in the previous option strategy I would just put on an OSCR. So once this reach 51%, sorry, that means I'm gonna lock in $34, and that's how I'm gonna guarantee or increase the odds of me making $34. Now, the reason why I like this instead of doing one contract is because in order for me to get $34 for one contract, I have to wait until the trade materializes around 100%. In this new one, where I increase my amount of contracts, I only need the trade to go to 50% before I can close it. So it's a lot easier and a lot faster for the trade to go to a 50% gain than it would be to go to a 100% gain. So once again, that's just a trick I use in my portfolio. Let's go ahead to review. Now, when you do this, once you go ahead and increase your contracts, you do get increased credit or increased premium. However, your collateral also increases. Hence, this is one of the biggest reasons why I do not wait until the entire $68 is materialized. Once it gets to 50%, I'm going to close it because I'm not going to risk losing my $200. I prefer to make $34, get my collateral released back to me, and then go ahead and do this trade again. Once again, if all of this sounds foreign to you and you guys don't know how this trade plays out, just go ahead and search your channel for Iron Condor, put credit spread, call credit spread, I think, yes, and you guys gonna see detailed explanations about all of these. Now let's go ahead and execute the trade. Let's go to submit, and hopefully that gets filled. Let's go to done, and it's pending. So there you have it, investors and future investors. For today, I gave you guys 2 exit strategy. Exit strategy number 1, I showed you guys how I closed the first one, which was, I believe, TTD, because it was 50% and above. The other exit strategy I just gave you was on SPY, where you don't have to wait until it's 100% before it materializes. There's a tricks you can do in order to make it get to your target and close it before expiration date. Now, I also showed you how to exit options. I showed you how to do the call credit spread, and lastly, I showed you how to do the Iron Condor, which is a 4-leg option strategy. Every single strategy we went through today is perfect if you're trading with a small account, and the reason for that is because the barrier to entry. Most of these strategies, when you do it, the collateral you have to leave is going to be between $50 and $100. The only time you're going to be required to leave more collateral than that is if you decide to scale or increase the amount of contracts you're going to do. So investors and future investors, let me know what you think about this trade, and if you guys are going to go ahead and try these option strategies in your portfolio. Not the stocks are speculative. Do your own research there, but go ahead and try the strategies. Let me know how it works out for you. Now, for those of you who made it to the end of the video, you guys are the real investors and future investors. Let's go ahead, like the video. Subscribe to the channel, because next Wednesday you're going to get another live video of me options trading and other option strategies. Now, here's the most important thing, right? I do make this free content and put it out there in order for me to help other people go ahead and make income from options. Now, in order for us to help each other, what I advise is that you should go ahead and share this video with anyone you know that's trying to grow a small account portfolio. That way, they could get some other ideas in order to get some additional income to supplement their already 9 to 5. Now, until the next video, keep pushing your investments.